Hi everyone, thank you for attending today's webinar, and for those of you that are listening remotely, just to mention that we will be doing a kind of a Q&A, obviously for those who are in attendance, and please feel free to put any questions into the live chat. I'm just going to give about 30 seconds or so just for allowing a few more people to join, and just to say that we will be running a poll today for everyone who is live, just to kind of, I suppose, get people thinking about what they'd like to hear from us in some of these sessions going forward. This is probably, I suppose, the 30th session I counted that we've done over the last 2 years. And this particular one, we're going to be focusing on an area which is often forgotten about, but it's about protecting our largest asset, which is people's income. And I suppose the starting point really is to say that for anyone who, let's say, is 40 years of age, earning 40,000 a year, if you think about it, between that age and when you reach a normal retirement age of, say, 65, you'll earn over €1 million. And that's why this particular area I feel is really important. I'm going to cover off one or two other things as well towards the end. And as I said, we really want to try and make this as useful as possible. So please feel free to put any questions into the chat or the Q&A section. We will endeavour to respond to them. Just for anyone that isn't familiar with Alpha Wealth, just to mention that we are a financial services company. Currently, there's 8 of us working primarily in Cork. We do have a small presence in Dublin. And we've been, I suppose, providing advice to individuals since 2013. The main emphasis is we try to make sure that we can give impartial advice as an independent brokerage in many different aspects of personal finance. And that relates to any area, whether it be given guidance on retirement planning to savings and investments. And the focus today really about protection, specifically in relation to someone's income. Hopefully you can see the slide there. There's a few of us. We had some photographs taken there recently in the Radisson Hotel in Cork, and I'm there centered with some of the other guys from the team. So just for anyone who has arrived late, just to mention, we have put up a poll just asking you what topic you'd like to hear our next webinar, and I can see there's already been a few responses, and please do feel free to answer that. So just to get into...
Just remove that poll from the screen there. It's blocking it up a small bit. You can take that.
Apologies. Thank you, Keenan. So just to get into the nub of the main area of focus today, I'd like to talk to you about really the way that our incomes are, I suppose, important to our household. And it really is an area that all of us, whether you're working for a company, whether you're self-employed, or like myself, have set up a limited company, you can make provisions to protect yourself in the event of being unable to work either fully or partially. The area of income protection, which is banded around, and there's sometimes a little bit of communication around this, is a financial product that's available through brokerages like Alpha Wealth, and it's about ensuring you in the most tax effective and simplest way possible. And I'm going to spend the next 15 or 20 minutes just running through how that relates to our everyday lives. So as you can see here, the focus on your income, and if you think about someone on an annual salary of 50,000 a year, which would generate approximately about 3,000 a month net, there are various calls on, our money on a monthly basis, whether it be to pay for a mortgage or rent, insurance costs, various bills, education, groceries, and so on. Now, this is not supposed to be comprehensive, but just to give you a kind of a flavor, if you are earning, generally reasonable income and you're able to budget correctly and I suppose appropriately, which is something that we help our clients with. And we have on our website a financial budgeter, which is a really useful tool. And I always go on about saying to people that it's something you should do at least once a year. It's a really simple process. It only takes about 10 minutes. And what it does is it just gets you to focus your mind on where you are spending your money. And this is a process that we work with clients as financial planners about where we feel that you can save money, whether it be in an insurance plan, whether you're overspending in one area over another. And again, not to repeat myself, but I say it regularly on these webinars, financial planning is about balance. I think most of us have a general good sense of what we should be doing, and sometimes it's a case of just getting an opinion about maybe putting more money into one area over another. Okay. Now, just to, I suppose, go through the, I suppose, situation whereby, let's say, if you are in a position where you're unable to work through illness, injury, accident, or disability, anything that's health related. Examples would be, let's say, if you're out in the garden playing with kids and you have a bad fall, break an arm, or you're painting windowsills on a Sunday afternoon and you fall off a ladder. These are all things that can affect your ability to work. And the issue is that whilst many of you, including now self-employed people, would be entitled to some form of state benefit, it's approximately about 12,000 euros a year, and it only lasts typically for 2 years. So the problem is that a lot of those bills you'll still face, and you can see that it has a big, I suppose, impact on your ability to cope with the various different expenses. The benefit of income protection is that it allows you to insure up to 3/4 of your income, which will give you enough money typically to cover a lot of those bills, particularly the important ones. You can see from the slide here, the savings I've reduced down to nil, because typically in that scenario, there are certain things that you may have to cut back on, and that may well be one of those. But in that example that's being used, you can see how the benefit of income protection, in addition to statutory sick pay, will allow you to have the money to afford things. And that's the maximum. Obviously, it can vary depending on whether there are two incomes coming into the household and what the level of income is that's required. The one thing is to make sure that what you are being provided for and what's being recommended makes sense to you. I've listened to a few kind of sort of webinars recently from people in the industry, and I sometimes get a little bit perplexed about what people are being told, and this is where what I say to individuals is just, I suppose, have a bearing as to what you have. For example, let's say you're working for a company that provides benefits over a longer period. Some companies are quite generous in what they provide their employees. For example, things like death in service, a pension scheme, and that they will pay you in the event of being unable to work for an indefinite period. On that basis, there is no need for you to do anything beyond that. If you're in a situation with a partner or a spouse where they or may not have protection cover and it's a concern, again, that's an area that perhaps may be worth looking at. But for you as an individual, if you were working for, say, one of these big multinational companies, whilst it's possible to insure yourself, I'm just not convinced. Like, you cannot be better off on claim than you would be typically, and that's why the 75% cap is put into these things. Income protection, and sometimes people get confused by what it actually is, and not to confuse it with another form of cover, which is called serious illness benefits. So when I talk to clients about protecting you and your family against the things that can happen, and really it's not particularly, I suppose, nice to talk about, but it's a reality of life. What happens if you get hit by that proverbial bus? How can you make sure that yourself and your family are being protected? There's life assurance, obviously, which I'll talk to you briefly about in a moment. It's not for today's discussion, but just to mention that there is something that you can do in a very tax effective way to insure your family. Income protection provides for a benefit payable monthly in the event that you can't work either fully or partially. So I talk to clients around the fact that maybe, if you have to drive during your job and you have an accident that allows you not to be able to drive a car, there will be some benefit paid to you, and that may cover the loss of earnings that you may suffer, or the fact that you cannot earn as much as you would have done. Why I favor this particular type of cover over serious illness benefit is that the criteria for paying or getting a successful claim on this is typically provided by a doctor, sir. So if a doctor would write that you cannot perform your job either fully or partially, after a period, and that's something that can be defined by you and your advisor. And typically the way this works is that you can get insurance from the first day that you're unable to work, after a month, 3 or 6 months period, typically. And this is where we as advisors work with clients and say, okay, well, let's say you're working for a company that has no income protection benefit, or if you're self-employed or a company owner, what would be a reasonable amount of time that you feel that you could survive for without receiving this income? Now, whilst the natural reaction might be that, that would be from day one, the plan will cost more money the sooner it kicks in. And generally speaking, as a rule of thumb, I would suggest to most people that they can probably afford to live for around 3 months before they require this type of insurance. It is typically for the longer term. And I'm going to show you some examples in a moment as to what typically people claim for. But as you can possibly see on the screen, if you're single and you're claiming from the state, you're likely to get about 20% of your current earnings. If you're an adult with a dependent, roughly about 35%. For those renting in households, there's a big gap. Obviously, if you've got other expenses and so on. And whilst savings can somewhat mitigate the problem, a lot of us don't have enough savings, particularly, again, if we're out of work for a longer period. So just think about your income, whether you're an employee. The first thing to do always is check and see what your employer provides. So when I'm sitting down with clients or talking to them over Zooms, I say to them, it's important just to check in with your employer. You might be able to see from your employment contract, and it's a simple enough question to ask, what will happen if you were unable to work? If you were out of work sick today, for how long would your employer pay you? The typical kind of, I suppose, period for companies would be 3 days, but again, depending on your employment type. So let's say you work for a company that had benefits for 3 months. It would work well to look at this type of insurance that would insure you beyond that period, so there'd be no gap in your income being paid to you, albeit at that 75% level or lower, depending on what you felt comfortable with. If you're self-employed, by definition, you would not have any benefits, and you may not even be entitled to the state benefit, which is something that you should be aware of. And again, we can talk to you about whether or not you would be, but I feel that certainly income protection will be really important in that instance if it applies to you or your partner. With regards to savings and a nest egg, I will talk about this briefly later on in this, but I think it's a blended approach. It's not a one fits all. So what I say to people is check and see what you would be covered for, and then make sure that you make provisions. And it's more a case of knowing what these plans provide for you and how much they cost. So looking at these potential risks, being unable to work, suffering an illness, obviously being incapacitated. And you can see on the screen there, the risk of something happening to someone before the age of 68. And these are statistical figures taken from an actuary that, there's a high degree of risk of someone being unable to work for a month or more. The risk of death is quite small up until that age. The risk of a serious illness is slightly higher, but still not very probable. And then there's the probability of any of the above events happening. And again, please, guys, I'll just take a second here to say, if there are any questions, please do feel free to put them into the Q&A. We will endeavour to get back to them and come back to you. And we are offering all of you a complimentary financial review. I'll populate the details later, and many of you will have the information, and we can provide both the slides and the video to anyone that has missed any part of the presentation. This screen here is showing that if there's a joint scenario where there's 2 people in the household, the risks of these events happening obviously would increase. Now, I'm not going to dwell too much on that today, but just to give you some flavor of what is covered for. The key thing to know is that, as I said earlier, it's anything that affects you in any aspect of your health, whether it be, mental stress, cancer, which is the biggest form of payment, followed by stress, believe it or not. And the average claim for income protection is about 5 years, which might surprise many of you. And you might think, well, how could somebody be out of work for that sort of length of time? just noting that if you take cover, and you're covered from the day that you get acceptance by the insurance company. So the key things I say to people is, number one, you should know that this policy is available to all of us. The second thing to understand is what is the cost of it for you, and whether you'll get cover on these standard terms. So let's say you've had a medical ailment in the past, a back disorder, back pain that has prevented you from working for a period. It's not that you cannot get cover for income protection. It's just likely that you're likely not be covered for anything that relates to a back injury, because the insurance company would obviously look at that as a more common event that may occur. And it's more about being aware of what you would be insured for. So that means that you'd be covered typically for everything else other than, being unable to work through anything that relates to a back problem. And that's I suppose, a generic, and all I say is that it's worth exploring. And until you get a decision back from the insurance company, there's no real decision to make. So it's a two-step process. You find out what it would cost and whether you can get cover. And then the next decision to make is, do you proceed with the terms that are being provided? So from that basis, it's worth even just looking into this on the first step approach. Just to give you kind of a quick example of the type of cost that's associated. So somebody that's looking to insure, for example, 40,000 of income, which would require a salary of somewhere in the order of about 55,000, not forgetting that you can only insure for 3/4 of your earnings. There has to be an incentive for people to return back to work. And the insurance companies would also work with you and help you in terms of rehabilitation, which is a useful process in itself. They spend a lot of money helping people, I suppose, adapt and get back to work successfully, because obviously it's in their interest to do so. But you can see here that the cost of providing for that level of benefit for someone who's in their 30s is approximately about 60 euros a month. But bearing in mind that if you're paying for this policy personally, it would cost you only 40% less than that. So it's 60% of the total cost, which is an example, it's about 36 euros a month. For someone in their 40s, and this is why people should not typically delay in taking these types of policies, you can see the cost goes up to around 94 euros a month gross, but the net cost, and you get tax relief at the source here, so the cost is adjusted pretty much from the get-go, it's around 56 euros a month. So that's quite considerable, because if you remember what I said at the start of this webinar, if you're in your 40s and if you're insuring for 40,000 a year, potentially the life company is, I suppose, liable or on the hook for about €1 million if you're unable to work for 25 years. And you might say, Nick, well, okay, but how likely is that? Well, let's say, if you're a surgeon and you get a really bad cut on your hand through whatever you might be doing, you're unable to do your job to its extent, and that would mean that you'd be paid out. It's not that you can do another position and that they won't pay you. There is a very strict definition of the fact that it's your own work duties. Now, the cost can vary for people who work in different types of industries. So for example, my role typically involves me sitting behind a desk, and I do business miles. So I'm a slightly higher risk to somebody that doesn't travel at all through their work. And there's different gradings. People who work, say, for example, on building sites will be seen as a slightly higher risk, and hence the cost would typically be slightly higher. But it doesn't mean that they cannot get cover. And talking to an independent brokerage like ourselves, we'll always endeavor to get the best type of policy at the cheapest rates, which we would discount for all of our clients and make sure it works effectively for them. The big kicker for income protection is the 40% tax relief for anyone who's earning over 37,000 a year. So to me, that would be really the entry point. I would say it's worthwhile insuring yourself, or indeed making sure that there are provisions if you are earning that amount or more. This example that I've put up is that there are many business owners out there, myself included, where you can get your company to pay the same level of benefit through the company gets tax relief. So whilst the cost may seem higher, the benefit is directly to the company. So in this instance, you can see here that the 58 euros nets down to 50 to the company's cost, and the 91 euros nets down to 80 euros as a company cost. And that's something that I would definitely encourage business owners to do. There's no benefit in kind to this, and it's a really good benefit to get your company to pay for. Examples of some companies that are available in the Irish marketplace, and typically the two providers that we would recommend to clients are Aviva, who have been providing this for the longest term. We provide a 15% discount on their quoted rates, and Zurich, who have just recently launched their personal income protection plan for individuals, having provided group benefits for many, many years. And if anyone happens to have employees, it's something that you can provide for all of your staff at a very low cost. So in Alpha Wealth, we've implemented this for the 8 staff members. It's a great benefit to provide. The reason being is that it does engender, I suppose, employee loyalty. It means that you don't have to worry about, paying this ongoing cost to any members of staff if they are out of work sick, and that there is I suppose, a no requirement for any medical health questionnaires done if it's done as a group. And for a group, you have to have 3 members or more. So it's not particularly a high level of, I suppose, qualification. It's typically, if there's a business that has a joint couple as the business owner and one other employee, you can get group rates even at that level. We have put in schemes for companies of 100 people or on various occasions, and it's a really great benefit because it's really simple for the business owner and it's managed by ourselves, and it's a great way of, as I say, protecting your staff. I'm just going to take a little pause now, just to kind of throw up a few questions. And one of them that gets commonly asked is, what if I can still work but can't do my full job? And I gave an example earlier about, what if you can work from home, let's say on a laptop, but you can't drive? And the key thing to always remember is that the insurance companies are very in tune to, what can happen to people. And they've been providing this insurance to all different types of occupations. Whatever job that you do, I can assure you that they've dealt with it many, many times over the number of years. If you're earning 40,000 a year, if you're earning 50,000 a year, and if you're looking to insure yourself that in good and bad health, you will always receive up to 75% of your income, this makes perfect sense. And if there are periods of time, and you can claim multiple times. So if you're 40 and you have an ailment in 2 years and you're off work for 6 months, you can be paid for a period of that time. You come back to work and then you have another ailment or a different type of illness and you're out of work for, say, another 12 months. Again, after the period of which you choose that you're not covered for, so typically, let's say 8 or 13 weeks, you'd receive the benefit, and that can continue indefinitely for however many occasions. But let's say that you're unable to drive and therefore you can't, complete all your contracts and your income reduces. That's where income protection would, pick up the gap, and it's great to have that kind of peace of mind. And at the end of the day, like any type of insurance, it's a piece of paper in a drawer that you'd like to think that you can avail from. In terms of, I mentioned earlier about what if you have a company, an employer that does provide this benefit, the most important thing is to find out for how long for. There may be some people listening who are public servants, whether you work, for any different types of public servant. Typically, benefits would provide for 3 months full pay, 3 months half pay, so it's 6 months in total. And you can use income protection either to pay after the 6-month period or to pay partially from 3 months and then fully after the 6-month period. And that's an easy way that financial brokers like Alpha Wealth can show you. And it does reduce the cost because obviously there's a period of which you don't need that benefit for. What is the biggest payment claim? And the average length of the claim I kind of covered off already, but typically that is an average of 5 years, and cancer and stress tends to be the most common form. I'm just looking at a couple of questions here that have been asked. Will a premium go up even though if you've ever claimed? It won't go up if you're on cover for subsequent claims. So again, it's better to do it when you're younger And obviously, when you've not had as many ailments, so I always say to people, if you're in good health, because people often challenge me and say, Nick, well, I haven't taken a day off work. Why do I need this? It's not really worthwhile. And the key thing to know is that you should do it while you haven't taken any time off work and you haven't suffered any ailments, because typically you're going to get acceptance very quickly with no restrictions or any increase in premium. And it's great then to know that this policy will stand to you. And let's say that you don't currently have benefits now and you go and work for a company in a year's time that does provide the benefits. You just let the policy lapse. You stop paying the premium cost. You don't get any refund. And whilst you might think, well, that was a waste of time, the important thing is to know is that at least you were covered for that benefit of a year. But now somebody else is going to pay for that benefit for you. In this case, obviously the company you work for. That's all well and good. I say to people, you can only make provisions for the here and now. And if you present as someone that doesn't have cover, this is a really easy product to avail of that will provide you that benefit. So in terms of another question, just to pick up on, somebody asked, what happens if you have a business that goes belly up, or there's any issues with staff? This cover does not provide benefit for that. There used to be types of provisions for that scenario. It's not really applicable. I just want you to remember that what this policy provides for is anything related to your health. So it's an accident that can happen. It's an injury. It's a disability or some form of illness that prevents you from working fully or partially for any period from 1 day upwards. And the average period of which I suggest that people would look at would be 2 to 3 months, that you could probably tighten your belt, live off a bit of savings. But if you were out of work for longer than that, it's really going to affect your household. And that's why this policy is so important. And it's really underutilized in the industry, particularly given that the government give you 40% off the cost because you get tax relief. And that's why it's really worthwhile exploring. The other thing I forgot to say is that the benefit you receive, so let's say you are insuring yourself for 30,000 euros on an income of 40,000, most of that money will be paid to you without any deduction for tax because it's treated as income. And obviously, if you're still on the lower rate of tax after receiving the income, you're going to pay very little to the tax man. A question here asked by someone is, I work for a company that provides income protection. Am I allowed to get my own policy on top? And will I only get paid for one of these? Yes, you will only be paid out on one of the plans up to the tune of typically 3/4. Some companies do provide full income benefit. It's not that frequent, but it is something that some companies do provide. In that instance, my advice would be, well, I would only look to ensure after the period of which your employer ceases. Most companies would only pay up to a certain period, so it's really worthwhile finding out first before you do that. Just to move on, and I just want to mention one or two other things, and there's two final bits to this. Firstly, you can provide for an insurance which is known as death in service or salary, payment on death, where you can insure yourself for 4 times your salary and get 40% back. So I speak to many people who have life assurance, they have mortgage protection cover, and they didn't realize that you can affect 4 times your salary in the event of your passing and get 40% back on the cost. It's really sort of, again, something that a lot of people are unaware of, and I would strongly encourage you to consider that, particularly if you have dependents. The last bit on this piece is mortgage protection. Many of you may have mortgages. You would have been forced by the bank to provide mortgage protection cover to them. Typically, they would have sold it to you, not at the lowest cost, I must add. And I'd say if you are paying over 30 euros a month for this policy, you're paying too much. And please do feel free to reach out to us, and we'll talk to you about how you can reduce the cost of that with very little hassle. The final thing, just to finish up on, is savings. I mentioned earlier that it's really important to build up a little bit of a fund, particularly to ensure yourself in that month or two that you may not be paid by your company or indeed by the insurance company if you have income protection. And there's a really good savings plan that we strongly recommend. I talk to clients all the time about it, where you can get interest typically of 5 to 6% a year. You can access the money at all times without penalty. It's totally flexible. And whilst you may have some form of savings vehicle in place, if it's with the bank, post office, or credit union, personally speaking, I think that you should really consider an alternative. The reason being is that you'll earn no interest in those institutions, certainly not for the next couple of years. And these plans give you great flexibility at a very low cost that we will provide them to clients on. We provide 100% of the money invested in these plans. And if you do have one of these plans already, it's worth just checking in what fees you're paying. I say to people all the time, fees can be a really big deterrent on making money, and always check the fees that you pay versus what someone else would be able to provide the same plan for, obviously, to you. So just to finish up, this is a quick summary on the areas we provide advice on. Just to go through quickly, we give mortgage advice to clients as an independent brokerage. Anyone who's paying over 2.25% for their mortgage, please do make contact with us. I can tell you how myself and David can run through. You can reduce the cost of your mortgage. Most cases, talking to your own bank. Anyone who's on a fixed rate, they just need to find out what the cost of breaking the fixed rate is. In most instances, you'll be surprised how little it is to break that. If you're with KBC or Ulster Bank who are leaving the mortgage market, please do get in touch with us. There is a great opportunity for you to refix your rate with them before they move you into PTSB and Bank of Ireland, who you'll find will charge you more once your mortgage is moved across. The protection reviews I've covered off on, and again, income protection is a really great underutilized product, and it's worth just exploring. Get a cost of what it would cost you and find out whether you can get the benefit. And only then do you need to make a decision as to whether it's something that you want to utilize. We give pension advice as an independent broker. Please do make sure that you know what your aim is for your pension and allow somebody to give you guidance on that. And estate and succession planning is an area that we've spoken to before and to people about, and we can give you some really high level broad strokes on. Child savings, tax back on savings accounts. Again, these are subjects that we'll happily go through with you if you want to avail of the 30-minute free Zoom that we are providing to clients. Please just feel free to send a message to us. You can get onto us on our Instagram page, through our website, or indeed email David Looney or myself, and just say that you want to avail of the Zoom that's been provided to you as a way of a financial review.